Chinese electric car giants are planning on building cars in Mexico and importing them across the border, and finally the US is noticing this. In my opinion, this is a holy crap moment. If China starts building cars in Mexico and is able to import them to the US with the tax credit because of the way we have things designed in our infrastructure bill and the way it's written, it could destroy the US auto market. 3 major Chinese EV car companies are planning new factories in Mexico, and this is per the Financial Times. This includes Tesla rival BYD, fellow giants MG, which is actually SAIC. They use the name MG, the British car company, and Chery are in talks over new sites in Mexico, and they're planning to make these pretty automated plants. And this is pretty alarming to U.S. officials. The move will likely fuel fears that the Chinese firms may use Mexico as a backdoor into the U.S. EV market. Oh yes, that is their plan. And the price will be lower than what's on the market today. Now, this may sound amazing for consumers, but there's a lot of negative impact you might be missing. This investment is causing angst in Washington as it seeks to keep China out of the U.S. electric car market. Remember that China controls the bulk of battery materials used in electric vehicles. U.S. officials have reportedly raised concerns with their Mexico counterparts over the Chinese investment, with the new sites potentially including a new $1.5 billion to $2 billion plant for MG electric car factory and a factory investment additionally for BYD, which is a Warren Buffett-backed car company that competes against Tesla. And they're huge. They're the biggest one out there. China's electric vehicle market is booming, and local manufacturers are increasingly looking to expand overseas amid cutthroat competition for customers back home. And China also dominates the global electric vehicle battery supply chain, allowing it to produce far cheaper EVs than many of its U.S. rivals. And that is a concern. The U.S. has attempted to protect the U.S. market by unveiling new rules earlier this month to make it more difficult for EVs made with Chinese parts to qualify for tax breaks. But the possible expansion of Chinese automakers into Mexico, which recently replaced China as the U.S. biggest trading partner, will fuel fears that it could serve as a backdoor. Very smart of China, but also extremely concerning for lawmakers. A select committee on China recently warned stronger trade rules may be needed to prevent China and their automakers from gaining a backdoor to the U.S. market through its trading partners and destroy the U.S. car market. Mexico has proven a tempting target for car makers in recent years, thanks to the low labor costs, the free trade agreement in the U.S., and no UAW unions, so the costs are substantially less. Tesla is planning to build a gigafactory near Monterrey, Mexico, where it's expected to produce the long-awaited $25,000 electric car, which is a great way to cut costs. Now, Chinese EVs are pouring into Europe with one really big reason. They can charge twice as much for their vehicles. For example, a BYD Dolphin costs about $15,500 in China, but it sells for $39,000 in Europe. And Tesla's China-made Model 3 sells for 13,000 euros more in Europe than it does in China. Even though Chinese automakers double the price, they're still selling EVs cheaper than what European automakers are charging. And aside from shipping costs and a 10% import tariff, these higher prices are pure profit for China. And that's why Chinese EV makers are flooding into Europe, and soon they're going to try and flood into the US. And this is not good for our economy, for our workers, or for the auto industry. For more than a decade, China's car manufacturers had a presence at the main auto shows in the United States with promises they'd be here in 2018, 2019. We're going to sell models even into 2020. Well, obviously, those plans didn't pay off. But this new strategy could change everything very soon. By building electric vehicles in Mexico, Chinese car companies could enter the U.S. market under more favorable conditions. According to the agreement between the United States and Mexico and Canada, 75% of the vehicles must be manufactured in North American region for its manufacturer to avoid paying import duties. And although there are currently no Chinese car brands available for purchase in the United States, vehicles made in China are already sold in the United States, mainly under a Swedish brand Volvo and its new high-performance division Polestar. So with one foot already within North American zone, Chinese cars are much closer than you might have already imagined. And don't be surprised if someday, at some point, a Chinese car wins Car of the Year, Truck of the Year, or SUV of the Year. But are consumers willing to buy a car that says made in China? Well, that's for you to decide. Let the free market reign. But be forewarned, if you destroy our car market to go for a Chinese car where no jobs are coming here, this could be a real problem. If you like this video, give it a like and subscribe for more videos like this one. If you have any comments or questions, I'm sure you will. I'll be more than happy to answer. You can support me by buying me a cup of coffee. The link for that is in the description, plus all the links for our website, social media, the book, and the podcast. I'm Lauren Fix. Thank you so much for watching.